Welcome back to Grade 11 Accounting. We will be continuing our discussions, and the next PowerPoint is about accounting and business. So you can see the agenda for today goes something like this. We're going to look at what actually is accounting, why study accounting, types of businesses, and of course all businesses require accounting, forms of business ownership, which I'm sure you have been exposed to earlier on, categories of accounting work, the accounting cycle very briefly, and then we'll talk about the differences between bookkeepers and professional accountants. So understanding what actually is accounting. Accounting involves 5 various steps or activities, as you may call them. First of all, you're looking at gathering financial information. Last time I also hinted at the fact that there is no non-financial info that is part of accounting. So it has to be financial information that has numbers, dollars, value to it. Remember the concept of economic phenomena. Second activity is preparing and collecting permanent records. So we have to look at permanent records such as bank statements and receipts and invoices. These are permanent records of the business. Then we summarize and classify a lot of the financial information, and of course we prepare all these information into reports. As we put them into different types of reports, they become summarized into different kind of for different types of users. And of course accountants also establish internal controls, because as far as internal controls are concerned, they are really helpful to understand and avoid fraudulent activities. Now the question comes, why study accounting? Accounting is fundamental to business, as we explored earlier on, that accounting is the language of business. And of course, if you don't understand the language of business, it becomes extremely difficult for you to succeed in any kind of business environment. So now why study accounting? Accounting on the job. So perhaps you're looking at working in the accounting area, finance area, which requires you to have some kind of understanding of accounting. And remember, every business has several departments. One of the main departments is accounting and finance. Another reason for you to understand accounting would be accounting in daily life. You can have some small examples such as calculating HST on your purchases, to a bit more complex examples where you're looking at reconciling your own bank account as you earn money and you want to know how much you're spending. And of course, there can be other uses as well, personally. So owning your own business can be a use as far as accounting is concerned. So let's say you started to you start a dry cleaning business. You would need to understand what kind of monies you're bringing in and what kind of expenses it has. And so you might need to hire an accountant, but at the same time, if you have some kind of an understanding, it would be absolutely wonderful. And of course, accounting as a profession. Accounting as a profession means that you will then be responsible for other businesses and their accounting, and it will be your business, your profession. You can actually own an office kind of a situation. Now moving on to types of businesses. There are various types of businesses, but very briefly we'll talk about 4. And this is where you might need to understand the differences between the types of businesses, and so you can understand the different ways of doing accounting. So you're looking at service-based businesses, such as earlier I mentioned dry cleaning. That's a service-based business. It sells service to the public. It doesn't really sell a product, but it does something for the customers. Merchandising business is where you're selling products. So here, the company that is in the business of merchandising, they buy and they sell products. And this can be like a grocery store, a convenience store, and so on. And then you've got manufacturing businesses. These are businesses that actually produce materials for the merchandising business. So you are not a wholesaler, you're not a retailer, you're actually a manufacturing business. So a business that produces desks, for example, they buy their materials from someone else, and they produce them convert them into desks, and then they sell them to retail. And then of course you've got the non-profit organizations. This is where activities are for social needs or charitable organizations, and you've got lots of examples, Red Cross being one of the major ones. The question here now comes, how are these businesses formed? what kind of ownership structure they have. So there are three general ownership structures that exist: sole proprietorships, partnerships, and corporations. We have to understand what sole proprietorships, partnerships, and corporations entail before we get into their accounting. And I'm sure you've been exposed to this in grade 9 or 10 business or in your daily life. So proprietorships are those businesses that are owned by one person, and there's no difference between the person and the business. So this is completely owned by the individual, and as far as legality is concerned, there is no difference between this individual who's the owner and the actual business. So an example might be a tutoring business that someone does from their home. So they don't need an office space, they don't need to go outside, they don't need to advertise using a different name. They're just looking at advertising their own service, and it's a very, very small, we call them micro businesses. The disadvantage here is that there is unlimited liability, which means that if that business gets sued, that person also gets sued. Partnership is the next stage from proprietorship. It just means that there's two or more owners of the business, and they also have unlimited liability. These days you can have a limited liability partnership as well. We might get into that, but let's leave that for future. Corporations. So corporations are the big kind of businesses that you might have heard of, but at the same time you may not know, but 90% of businesses are corporations. So they may start off as sole proprietorships, but right away within a year or 2 years they convert into a corporation. The advantages of corporations are, number one, that they have limited liability. That if the company gets sued, there's some kind of an issue with the company, the person, the owner of the business, has nothing to do with it. So they don't get personally sued. And the second advantage, of course, is tax, which we will get into probably in grade 12. So moving on, there is a lot of categories of work, accounting work, that we have talked about already when we were listening, trying to understand the activities of work. But here we are listing three major categories of work. So there's routine daily activities. This can be repetitive at times. You're looking at one receipt, and then the second receipt, and the third receipt. You're looking at a bank account, the first transaction, second transaction, and so on. This may be repetitive. At the same time, this is a very necessary component of business. Then you're looking at periodic accounting activities. This occurs at regular intervals, such as payroll. Payroll is a great example. Employees don't get paid every day or every hour. They get paid every 2 weeks or every month. So it's a periodic activity. You know that's happening on this time. And then of course you've got miscellaneous activities. For example, if a business hires someone, now when they've hired this person, there's some kind of accounting information that needs to be done. So at this point, then of course you're looking at a miscellaneous activity that may happen without a period in mind. The accounting cycle is pretty lengthy. It's got 9 steps. The next 2 slides are devoted to the accounting cycle. One of them lists them, the other one just goes through a visual, a graphic for it. You don't need to memorize them. You don't need to go through it in more detail than necessary. Just understand these 9 steps, but we remember that these 9 steps are the ones that we're going to explore over the course. So at this point, should understand point number 1, step number 1. Transactions occur. So as transactions are occurring, you need to be aware of the fact that they are occurring. So it's only financial transactions. Remember that. It has nothing to do with non-financial transactions. Now moving on, you can see the visual as well, and take a look at it when you get some time. So the last topic today that I want to cover is the difference between bookkeepers and professional accountants. So who are bookkeepers and who are professional accountants? Last time we talked about professional designations, and you might remember that we mentioned in Canada the eminent professional designation is CPA, Chartered Professional Accountant. So the word professional is even in the designation. So you can see that there is definitely a difference between bookkeeper and a professional accountant. So you should understand what a bookkeeper does. Bookkeeper is someone who is concerned with routine daily activities. So they are the ones who are doing a lot of repetitive work, going through the invoices, going through your receipts, going through your bank accounts, going through and maybe doing your payroll activities and things like that. They are responsible for a lot of accounting work, especially safeguarding your documents, because safeguarding the documents is really, really critical, and doing all the preliminary accounting work. So what does a professional accountant do then? Professional accountants are the ones that are licensed in your company or in a firm, and these are the people whose name and whose license is always at stake. So they develop strategies and systems to make sure that all the correct data, accurate data is entered into the systems. They are also looking at ensuring that generally accepted accounting principles are followed at every occasion, at every time, and they're supervising the bookkeepers and the junior accountants. It's very critical to do that. And of course, they're preparing the financial statements and meeting with clients. Meeting with clients or to interpret data for their client or for their bosses is extremely critical and requires a lot of analysis, requires a lot of understanding of accounting, and that is where professionalism comes into play. A professional accountant can usually have high-level positions, and they are usually key executives in firms or in companies. So if you think about it, think about Rogers as an example. Rogers is a great company. It's got maybe 20 vice presidents, and I'm not sure exactly how many, but I'm assuming that about 25% of them, 3 to 5, maybe 6, 7 of them have accounting background or finance background, because it's critical for any business to understand accounting and finance, and they must support these people. Currently, Rogers' CEO is Nadir Mohammed, and Nadir Mohammed is also a CPA. So it's very clear that a lot of businesses hire CPAs, and as they become executives, they also become vice presidents and presidents of different companies. Lastly, I'd just like to explain that a bookkeeper is someone who has a limited knowledge, limited background of accounting. And then, of course, an accountant is someone, as you know, who has gone through extensive education and training, and they have a license and so on. If you happen to work in an accounting firm, let's say that after a university degree or college diploma and you like to work for an accounting office, large or small or medium-sized, you would probably start off as a senior bookkeeper or a junior accountant. And they are very similar in the kind of work they do. And then as you move into the next level, intermediate accountant, associate kind of position, and then senior accountant and manager, that is where your responsibilities increase, and of course your compensation also reflects the increase of your responsibilities. So hopefully you've had a good intro to not just accounting, but also how accounting is related to business. And next time we will get into a bit more detail specifically about accounting reports such as the balance sheet. So remember, as always, ARTW, accounting rules the world. Thank you.